The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
It's Basil Chapman sitting in for Larry Pesavento, and my pleasure to be here. I'm usually on at 11 o'clock till 12 with the Tiger Technicians Hour, and of course my service is the opening call, a very comprehensive daily look at the markets, and I give positions and long, shorts, or whatever it is that we are following closely. And this morning we had a bunch of charts that were very important that I spent a lot of time over the weekend filtering out, dissecting, and trying to give parameters to say they are still showing strength, but by themselves it's no good if we have made a market turn of consequence. And today's a very close, probably would say, is one of those closes that could affect the monthly chart tremendously on many, many stocks. So with that said, the futures are, let's see right now, let me just show you the E-minis, ESM14, that's how I get it. Failure pattern so far, because it's under the 9-period moving of 1860, the E-minis are at 1857, and down 3, and the 120-minute chart showed a peak C that failed. I do not like peak C minuses, which is almost close to becoming a fact right now, as you've got yet another H pattern with a pullback from the. This is a big move. You know, we opened at 1861, fly up to 1871.75. Now, I have a technique that I use that I always tell subscribers about. It's a forward, most of my indicators are forward-looking indicators. This is a very forward-looking indicator because this one said that within 1 to 2 sessions, there should be a very sharp move up in the futures contract. They then hand the baton over to and it could come from a lower price, a high price, it doesn't matter. It just means that the futures should go up between 7 and 9 points, and they should impact the cash indexes, especially the S&P and the Dow, and that should push them up. And it works its magic, and it's got a way over 90% success rate, and then you're on your own. And it's exactly what they did. Market pulled back, was open kind of a little bit up, and then whoops, pulled back, and then took off, and the Dow was up over almost 140 points, S&P is up over 12, and now the S&P is down $1.51. The S&P is only up 40, and it's a wonderful signal that one can use. I actually wanted to use it just today to test out how the remaining long positions we have and how the short position we have react, because they are key stocks. And my thinking here is that if there is going to be a continuation of the down move now without a rally into the very first week of May, which would be Thursday, Friday, going into Monday, we have started the consolidation pattern in a very strong way. And I'd been thinking that this song, Right in 9 April, Shot Down in May, could be the factor that the sentence that we're following, but in fact we are sentenced to something shorter than that. If in fact the recent highs, that was it, and it's just lower highs and lower lows from here on. But there's a rotation going on. And if you look at different stocks that are actually very important stocks, let me just move this 120-minute away and show you. Look, GE is still holding well. Well, GE can't hold up the market, but it is a portender of relationships, and it's been very successful for the past year and a half to 2 years in predicting a little bit ahead of time rallies and failures in the market. UTX is my longer term pilot light indicator in my Dow quartet of GE, IBM, MMM, and UTX. Now, what's really important about this, UTX made a peak E at 120.64, and then there was a 119 round number high, round number low on that very bar, and that says to me, if UTX is not able to push and close above 119, let alone 120.64, that's going to be a negative. And if in fact it takes out Friday's low of 116.89, that's going to be very negative. So when we are looking at the Dow Quartet, that's saying so far UTX has held quite well, and I don't really have any other way but to count it as a peak C in the weekly, and that says any major sell here would abort that if it went all the way down to like the 108s or something, which is 9 points from here. At this particular point, I have to just say, high-level consolidation, it looks like, but the candle is a leg F, and it could have recycled in the monthly, but I have to be a conservative and call it F for now. And it's almost like a doji candle, which makes May really important for UTX. That goes for many of the other indices. It goes for Triple M as well, which had a very nice, it made an all-time high of 140.43, 140.43. Let me just type that in. 140.43. And we have seen so many stocks attempt to retake the previous highs or stop dead right at them. What was the stock I was looking at yesterday? Man, I tell you, it's unbelievable how many stocks have retraced almost to the dollar with huge amounts back. Let me just, I'll show you right now. Let me look at HOT. This is hotels and Starwood Hotels and Resorts Worldwide. Hey, I had this all notated last night. A, B, C, D, E, A, B, C. Hey, what's going on? Hot. Well, where's it? What happened? Anyway, so let me squeeze this to show you what I'm talking about. Yeah, the major high was at 74.80. Now it's a little higher than that. It's at 80. The high so far, the high is 82.16. But look at those beautiful retracements. Took a sharp pullback, and then it's taken a long time to get back to the previous highs. So which ones did I write them down? Yeah, well, IYR, I guess, is one of those that we were looking at. No, I was not. Oh, well, I'm not going to waste time. CVS, was that one of those? Dude, with so many, I wrote it down in the column, but I'm rushing through, so I'm not looking at them. Well, no, CVS, Chemoc Core, is doing beautifully in the monthly chart. Possible leg F. That's so interesting, isn't it? And now let me just go to the weekly and the daily. Oh, look at that candle today, that little wick. Big sharp move up in CVS. Opens at 73.71. Goes to 74.57, now trading at 73.69, hit the 9-period moving average, peak E with a round number 76 after making 76.36 high, all-time high, peak E in the weekly. There's a lot of stuff that's just saying, be really careful here. There are so many stocks that are starting to roll over. Now, they could hold very well, but at this particular point, you just got to be very, very careful. I want you to look at the IYT. I know that Larry often looks at the IYT. Leg E in the monthly chart with a potential doji candle. Now, this is very interesting. This is either G. So this is A, B. What's going on here? A, B, C, D, E. This is a possible F in the weekly chart. We don't know. The technical is pretty weak. Price is holding up beautifully. And what is the daily? The daily is at all-time high, made a peak C. Oh, this is one of those patterns that I need to spend a little time and explain. This is going to be very interesting. How the transports act in the next 3 to 5. But between today being Monday and next Monday, the IYT, the iShares Transportation Average, ETF, it's going to be so important to be watching this. This is EF. This is a G/C in the daily. I have to tell you, we are looking at such fascinating markets because I've been through so many charts, and those monthlies are starting to say to me, be careful, be careful. So we, in my opening call, we've raised a lot of cash. We have some positions. So far, they're kind of working out. But I have to tell you something. I'm not messing around. Stops are tight. And the short position, we just want to hold that as long as we can. And let me go through this now. All right, so you've got the EUR-USD. Earlier this morning, it was attempting a rally, and it's given that rally back. It's trading at 1.38430. It's made a peak E in the weekly, and it's making the pattern that is really a very... This is one of those patterns. Look, if I join those lines, and if I join these lines here, you've got pretty much a symmetrical triangle coming towards the apex. If the euro-dollar currency pair is able to break above the candle, this is the weekly chart of the 11th of April, high was 1.39051. If it takes that out, there's a real good chance it's going to test the all-time high, not the all-time high, the recovery high of 1.396. If, on the other hand, it takes out the support line, and in the next few days it goes to 1.377, that's saying, be careful, you've got not just an H pattern, but the 9-period moving average is resistance. The MACD is still quite weak. Stochastic's way at 70%. That's going to be a big negative. So watch this. And the reason why I'm making a big deal about these numbers, even though they're kind of tiny in relationship to the boundaries that you could be looking at, look at this. It's gone to leg E in the monthly. If it doesn't break above 1.3966 in this month, it's going to leave it. That's going to be an E, a peak E, but with a very tiny range and holding the 9-period moving average of 1.361 in the monthly chart. MACD is good, not great, but it's good, and the stochastic is very nice at 83%. But I don't want to see, if I close my eyes, if I took another chart, let me just grab a chart here, and I covered this, let me just cover it right now. And I cover the price action. Okay, it's a little messy. But I'm looking here. The reason why I put that over there is because I'm looking here. If you can see on Tiger TV, I'm right there. If I was looking at this and I said to myself, from the last low, and that's the low of 1.20417 back in July of 2013, there was a big rally in the MACD. Not a big rally in time. In price, it did move up, but very steadily. But the stochastic went from way in the 50% area to the 83% area. Where do you think the price is? And I would say that it's probably testing close to the previous high, which was up in the 1.47 area back in 2011, somewhere around July. But no, it's only gone to the 1.39 area. Did it touch 140? No, it went to 1.3966. So all I can say is that the euro has been rallying. It hasn't been fantastic. It hasn't been on fire. It's just been rallying very steadily. So that makes this a very important period. If you look at the USD, JPY, that's the euro, that's the dollar, Japanese currency pair, it's just stuck in this range. And the same thing in the monthly chart, but it's holding the 9-period moving average of 101.000. And the final thing is the dollar. Remember I always talk about the dollar being smacked down by the Fed? We'll look at that when I come back.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let me just tell you this here. I wanted to go through it, and then, of course, I forgot about it. But I wanted to tell you that when I was reading, it's really fascinating. You remember I said that I don't have any empirical evidence other than what's stored in the back of my mind. But the reason why I wanted to short the biotech sector for so long, and why, at least so far, the last bounce of shorting has been extremely successful, is because the biotechs have really taken it on the chin. And one of the reasons that I was so convinced that there was a top coming, and that's the same thing that's happening now when I'm looking at all the real estate. When I spoke about the rental increases, when I'm here in the Boston area, and Boston's always, to me, been one of the last to kind of pick up on any trend. I just don't see it really heading to a good conclusion now. Later on, 30 years time, whatever, it'll be fantastic. But I think that we're in a troublesome phase. I read somewhere on this paper, if I can just find the darn thing, it was right there, that there were 36 or 38,000, I think that's what it said, jobs that were the 38% increase in jobs, if I remember correctly, was mostly because of biotech and high-tech. And when you look at the area, what they've got here in the paper by Dante Ramos, a very nice article from the Boston Globe, tech colonies bloom. And he's got this whole thing, Kendall Square, called Ground Zero. And he's got former identity, the land NASA forgot. So the cost per square foot, $57.85. It's got Akamai, Pfizer, Broad Institute, Microsoft, Google. And it's had the rapid Houston style growth. Vast lab buildings with few shops sends a harsh signal. Stay at your desk, techie. Anyway, he goes on about each one. He's got Waltham. This is just off Route 128. The Watch City. They've got a whole bunch of office parks, Sunbelt scale apartment complexes. Cost per square foot, 28.61. Raytheon, Thermo Fisher Scientific. What a great company that is. Both, actually, Raytheon and Thermo. Actifio, I don't know, and Quantia. Downside, corporate aesthetic, limited transit. And then it's got the upside. So, Seaport District. Now, this is this whole new Seaport District. There were eye rolls when former Mayor Tom Menina proclaimed an innovations district in an area populated by older buildings along Fort Point Channel and windswept lots near Boston Harbor. But the Seaport District is filling in rapidly and even changing the neighborhoods around it. There's no question about it. I've been talking about this for about 2-3 years now. On weekday mornings, a street abounds with fresh scrub professionals walking to work in the Seaport District from another once neglected section of Southie. Former identity, cheap surface parking. Distinguishing features, chain restaurants, traffic backups, cranes. 52.94 square foot. That's Class A, and Class B is $29.95. Big names, Vertex Pharmaceuticals. Anyway, it goes on. And then Somerville. This I love. He calls it Somerville. Boston's Brooklyn. That was kind of cute. Nah, it's cute, but that's about it. But it's very interesting. There's been an absolute renaissance in parts of Somerville. And it's great because I love it when that happens. 23.20 in office square foot. Big names, Greentown Labs, Kapow, and Brooklyn Boulders. Now he talks about a company that called Grommet. But when the Grommet, which promotes undiscovered products, moved to its current office last year, it did the unthinkable. Though its front door opens in Cambridge, the company chose to use its backdoor Somerville address, says co-founder Joanne Domeniconi, says co-founder Joanne Domeniconi, to emphasize its affinity with the maker community. Somerville's manufacturing-friendly building stock attracts companies developing physical products, not flash-in-the-pan apps. So I think this is great. Distinguishing features, 3D printers, body art, fixed-gear bicycles. Reminds me of where I was recently. Where was I? Is that in San Francisco? No, it wasn't. Anyway, so this is Newport, Rhode Island. A target workforce of earnest 20-somethings already lives nearby. Anyway, this is downtown Boston, cheap alternative all of a sudden. So there's a renaissance going on. And I think it's really positive. My biggest concern is the speed and the overbuilding. Yes, BIB must be the largest biotech in Boston. It is. It is one of the biggest. I believe it is the biggest. I'm just saying one of the biggest. Amgen did a whole bunch as well. So I wanted to go through those, and I just wanted to talk about what I'm looking at in the bigger picture, socioeconomic, as to when we'll get some kind of major top. I don't think we're there. I think this is a correction. I'll be right back. Dow's up 65, S&P's up 1.11.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We'll be going back to this, the socio aspect over a period of time. There's no real rush or anything like that. As it comes up, I'll talk about it. It's all building up. At some point we will get we all know when there's an announcement of something so extraordinary that it just makes the front page of the papers, and that's going to be the signal. And it'll be someone's building a house that's worth a sum of money or bought something. It's usually new. So maybe it's not a renovation or anything. It'll be some figure that is so astronomical. It's probably the gross national product of Spain or something. It's big. So a quick thing. Someone sent me U.S. average new home price 2014 $290K, 212K. 2012 is $260K, 2010 it was $195,000, 2008 it was $230. 2006 it was $265, and 2004 $195. So it is above by 50. So it's about 12% higher, all-time highs. You got to respect that something's going on here. So that's it. Now, the question I had, email question was, VIX. Is VIX ready to break out? What is your compute? Well, my compute is, this is leg A in the volatility index, a brand new leg A. The one stopped at B before, and we've pulled back. And all I can tell you is this, that if on Friday at 4 o'clock, the VIX closes anywhere above 15.35. Let me give you the exact figure. 15. No. It's this month will be this week. It started already, so it's that one there. 50.80. especially if it closes above the 1650 area, the closer it gets to 1798, that'll be saying the magnet of the 200-period moving average of 1798 is becoming so strong. Rather than a repellent, it is becoming a magnet. And that's going to be very negative for the general market. And the monthly chart is not saying anything yet. So let's wait until it finishes on Wednesday at 4 o'clock. But that's the weekly chart. And in the meantime, back at the ranch, the daily is just saying, ho-hum, I'm just in this trading range now, nothing important. And, you know, when I talk about a consolidation, I'm talking about a rotation consolidation. After all, the Dow, the S&P are like, 2% down or something like that. So, well, what's the big deal? It's nothing. But there are technical aspects to it that are really important. And that's the reason why I'm looking towards the short side in more and more positions and more sectors, and we'll see exactly what happens this afternoon at the close. Now, the weekly technicals I was asked about in the VIX, the weekly technicals are I'm inclined to think at this particular point that the price will change the technicals, so the technicals are weak. It's under the 9-period moving average of 14.85. Is that 14.75? 14.65, and the stochastic at 25%. It really needs the price to move, and then it'll move. And the monthly chart technicals are very, very weak. Isn't that interesting? As I say, I got a feeling that this is one of those times where the technicals don't dictate the price. The price is going to dictate the technicals. If, in fact, by the end of the day, the VIX is up at instead of 14.46, it's up near 14.90 or higher. I'm just going to make it just as simple as possible. Kept it that way for years now, and it's helped us. Next question was, I think it's Gary wants, when will the S&P get long awaited 10% correction after options expiration, May? When will underlying strength and bid below market and S&P be worked off so we can get nasty fall? Big move up in Feb, still giving us dip buyers on Friday's sell-off, for example. SPX monthly leg and weekly. Okay, so this is a very good question. I think the same question or just about was asked on Friday. I didn't get to it. I'll do it right now. The monthly chart has alternative wave counts, and now they are legitimate wave counts. I took a long time. It's this Chapman wave unconventional flat-based restart. I just have this feeling that if it's identified early enough, at least it's telling you that there's a chance that 1737, we're at 1763, will be met this summer to the downside and probably taken out to the 1732 level. That's the way I'm looking at it. Now, that's in the back of my mind. All the trades and everything are based on other factors, but today has given me really important information about certain stocks that have been extremely strong and are pulling back today, and other stocks that have been extremely strong and are remaining strong today. And that to me is important because it's saying in the rotational aspect here, there are some longs that you might be able to hold if for people who just really want to hold long positions, otherwise they're in cash, and there are definitely going to be short positions. What would change this? Well, the up channel, the inside track up channel says that if the 1897.28 high of the, was that the 7th, or was that the 4th of April, if that is taken out, then what we're looking at is a potential leg D. So in any case, whatever I'm looking at, I'm saying the upside at this particular point is limited. It can happen, but it's limited to about another 300 points in the Dow, maybe 330 points in the S&P. That can happen, but it's getting harder and harder because the MACD is very weak and the stochastic's not good at all. It's at 72%. Now, the monthly chart, I don't really want to talk about the monthly chart as if today's the close. It isn't. Today is just the third to last day of the month. We've seen unbelievable things happen on the last day or two of a month, mostly to the upside. I don't know if this time it's going to be to the downside, but we've got to watch this real closely because if you look, I don't know, I don't want to do too many things at once. So let me answer the question. The leg that we're in at this particular point, for safety's sake, I'm calling it F/C. If it goes higher, it means that it's a D. And it could be a GD. Both of them say, hey, whoa, be careful from here, okay? And that would be above 1897. If at any point in the next 2 days, the S&P takes out 1850, 1852, which is the 9-period moving average in the weekly chart, and the stochastic slips to 68% and the MACD expands negative. That's just going to say the upside is really limited. That's all I've been done. So the S&P monthly chart is possibly going to make a doji with a little bit of a close somewhere in the 1860 area, if, in fact, we just hang around here for a couple of days. But I'm watching it real closely because 1790 is the 9-period moving average, and everything about the chart says that we are getting close to the period where we should be testing the 9-period moving average again. And if it's in this May period coming up, then 1790 is going to be really important to hold. If it takes that out, then we're looking at a deeper correction in time and price. Upside says, well, the high of 1897, even if it takes it out, it's still leg D. So in a way, that's a positive. So those are the parameters. Upside, I'm looking at maximum of 2003. Wow, imagine talking about 2003 in the S&P. 2003. Did I say 2000? It should be 1903. Sorry, 1903 to 1905. I'm not yet at the 2000 level. For those of you who fell off your chair, 1903, 1905 is, I think, the maximum in this move. And the downside, well, we spoke about the downside. So that's my count, and the count in the daily is monthly is leg D. Now let's go to the QQQ. 1, 2, 3. The QQQ series. This is almost certain. I don't see anything that's going to make the Nasdaq go back to 91.36, the recovery high. The all-time high is way higher. The all-time high is at 120.50, and we are now in an area of the 9-period exponential moving average resistance and support back in August of 2000, and that is at 80 at about the 90 between 90 and 91. And where was the high? I said it was 91. I better type it in. 91.36 is the high so far. So all I'm doing here is I'm saying that the MACD is turning down, but it hasn't crossed negative. The relative strength has turned down, but it isn't yet negative. The unbalanced volume went to almost a higher high, made an M formation, just as the price did, except that the S&P, I did a relationship yesterday. I don't think I'm going to be able to do it. I'm going to try to remind myself to do it tomorrow. I've got a relationship with the S&P to almost anything you want. And it's fascinating. Oh, it is very fascinating. But let's just do this now. If the Qs, the NASDAQ QQQ series trading at 85.91 down 28 cents, if it takes out, if it closes in April under 83, that'll be the first close under the 9-period moving average for quite a while. And that quite a while goes back to, it actually goes back to December of 2011, because if you look at this, the Qs have held, let me just move these away. Yep, the Qs have held very well. So let me just put this in so that I can now show you something very interesting. And I'll expand it so it's not too messy. This is the right chart, that's the monthly chart. Opening it up, and now look at this. And what I've been doing for my subscribers is I've been opening these up. Usually I have them a little bit closed because we want the big picture. Now we want the small picture. And the small picture says that little red line there is almost closing this month. We don't know yet, but it looks like it's going to close above the black line. And when that happens, it says, be a little careful ahead, because that is very often where you get it turned down. You have to get it in the next bar, but within 2 bars. So this is the first bar. The second bar would be after this. So this is another thing that's saying, if the Qs pull back, the 81.57 in May to 78.80, that's going to be the inside track support area. A close under that in the 79 area, and it says au revoir. To the monthly chart. It says, I'm taking a hiatus, and it's going to be quite a bit of a timeout. So I think being cautious. So yeah, that was the question. Now, the question I had before by Sarah was, VIX is ready to break out. Yes, I think that the VIX, now, it's a tough vehicle to, I tend to buy it every once in a while. I happen to own it now just somewhat, and it's there because it declines almost all the time, except in moments of real anguish in the market. So you want it for the bigger moves. The TVIX, for instance, if that's what you're looking at, trading at 6.47. I mean, that's pathetic. It should be, with the NASDAQ pulling back and all, it should be up at the 7.50 area. It's going to work for you, but it only works as an insurance policy. You only want to look at it when you suddenly see that the Dow is down at the 15,950 area, underneath 16,000. That's when the TVIX, if they haven't split it for 10 for 1 by then, if that's when you want to see the VIX at 8.30 or 8 point something, in the 790 to the 8 area. That would be exactly what you want. So insurance, yes. As a trade on the very short term, intraday, yes. But just holding it as a buy and hold in case, that's the way you got to play it. And you got to say, I'm prepared to see a 10, 15% pullback. Why? Because when it gets going, I'm looking at a 20 to 30% gain. So it's a tough one to trade. It's really a portfolio management type thing. And that's more or less what I want to say about it. Oh, so now we've got a call from John in Philly and Brian in Jackson, Mississippi. Oh, John, I didn't see that until right this second. You'd like to look at, and I'm about to run out of time because I'm leaving before the final segment. So let's go through this. You want to look at?
Basil, the NYA, New York Stock Exchange Composite. Real quick question for you.
Yep.
And I'll hang up and listen. Do you see any clues that this index of stocks will back away from the highs? That's the question.
Okay, real quickly, the answer is, at this particular point, it's a high. Well, I'm sorry, what? Okay, at this particular level, it's a high-level consolidation. The moment that the NYA, which is trading at 10,505, up 0.46, the moment, at some point it will do that, but when it takes out 10,250, 10,271 was the low that I'm talking about. But if it goes under that and closes under that, you will see the stochastic pullback sharply. The MACD continue to deflect lower, and that will say that the candle that's forming, that's a potential E in the monthly, with a doji candle, will test 10,108, which is the 9-period moving average in the monthly. What would change that would be a sudden burst of energy that sees it close above 10,690. 10,669 was the high, that all-time high. If it closes in the 10,690 to 10,700 area, it's kind of saved the day, and it says that I probably will have one more month of backing and filling up at these levels, but it looks to me like there's some kind of a rotation going on, and there's some kind of high-level selling and some distribution. My eye says the MACD is telling me there's distribution in the NYSE. So I hope that helped you. And just one quick thing before I go, because those are the parameters I'm looking at. The day is young. We've got 2.5 days to go before we wrap up the month. But I'm looking at that. I'm saying the NYSE is actually held very well from the pullback. It needs to break on a very short-term basis to break under 10,435. And then it'll say, yep, maybe we're going towards the lows. But if it makes a new recovery high above 10,621, that says it's going to test the old high. And that's part of that high-level consolidation. Folks, Basil Chapman sitting in here just as we're wrapping up. I'll do this. We've got Daryl Martin coming on. Stay tuned for the shows. Don't forget, Tiger Dollar. It's the last hour or so to get it. Test is going down. Be careful. I'll be back tomorrow. Stay tuned for the rest of the programming. Thanks for being here, and best to Larry.